What are we doing when we are buying a share? Do you have any idea? 9 out of 10 people think it is the quickest way to make money. And it is a quick way to make unearned money. Unearned because you don't work for it. You buy it at a price and somebody else buys it at a higher price. Correct? Have you added any value to it? Have you worked on it? No. Have I worked on it? No. Nobody has worked. So here, what are we trying to do when we are buying a share? Very easy, because it's very difficult answer to give. If I tell you, you bought 100 shares of Tata, what does it mean? It means nothing. But assume tomorrow that there is a newly started company and you are buying all the shares in that company. It has got only 100 shares. Does it change anything for you?
Yeah, become the owner.
You become the owner, correct? And you may either run it or you may have a manager run it, correct? So, what do you do when you buy 100 shares of Tatas? You are a part owner and you are trying to say that Tatas is a good manager, I trust him. That is the one way to look at when you invest in shares. Now your attitude to investing will change, because now you started thinking beyond the price. Otherwise, I am saying I buy at 80, the guy has told me to buy, it will go to 100. Okay, after a few days I find it goes to 95, I am wait for 100. And then 70, it's a long-term investment now. So this is how all of us accumulate so many shares. So this is one approach I take. Today the stock price of a bank called Axis Bank went up 13%. You know the logic?
Yeah.
Because the FII limit was increased. Has it changed anything in the bank? Nothing. It is only you think you got a new bakra to buy that. There was nothing which changed in that. But before you invest into Axis Bank, what should you have thought? Saying that, yes, that bank is going to make more money than keeping money in the bank deposit. I was with a friend of mine who was a fund manager. There was an annual report lying on his table. I said, Baltronics. I said, let me understand that company. It was a new company for me. The stock was trading at some 320 rupees or something like that. He said, do you need the thing? He said, नहीं मुझे ज़रूरत नहीं यार, किसी ने ब्रोकर ने बोला मैं ले लिया फंड में, अभी वो 40 रुपया ऊपर हो गया है. बोला अच्छा है. So I travel a lot, so there's a lot of time to read. So I started reading that thing, annual report. क्या बनाते? They make those barcode labels. Sir, barcode labels में इतना पैसा कहाँ से बना सकता है? It's a commodity item. You can, and it is sold by the weight. It's not even sold by the numbers. Kind of a commodity. Then I started looking at the numbers. I have lived with numbers from my class 9, so numbers talk to me. So it's interesting. I started looking at the inconsistencies in that. His debtors under 6 months. Do you understand?
Yeah.
That is money which has to be collected for sales made within the last 6 months, were far higher than the sales he showed in the last 6 months. So it set me off. And I started going into the balance sheet. I didn't go beyond the balance sheet. I did not talk to anybody. And there were about 8 or 10 such inconsistencies which showed up. I called my friend. I said, you sell that share pehle. Kya ho gaya? ऐसा है. We were colleagues at CRISIL and he had forgotten to analyze a balance sheet. Because he had become a capital market animal. कि जो है, price is what he is trading in. He is not trading in stocks. Bhav, price is what. So we wrote that. We published it in Moneylife. After that, there were a lot of things. I got a call from Sudhir Rao also, who was the managing director. And then they issued some clarification. Today, of course, the stock is at, I think, 5 rupees. 5 rupees. When you put money in the stock market, what are you looking at? You're looking at a return. The stock market, yes, I believe in stocks a lot. Because I think that's the only thing which will defend me against inflation. But I also know that the returns will not come when I want it. If I have chosen carefully, the returns will come. But I don't know when it will come. Because when I need that money, suppose I plan it for 3 years, I cannot in 3 years, there could be a scam, there could be a market crisis, there could be anything. When I sell, it may be half my price. Nothing would have changed in the business. My analysis may be perfectly right. But the market may not give me that price. So I have to invest with money which I really don't need at this stage. Stocks are a way to build wealth. It is not for savings, please understand. Or income. I think stocks, when most investors buy, they never sell, because it is a tool for creating wealth, I believe. I think there may be people who differ. There are people who trade every day in and out and they call themselves expert. But do you see the name of any trader in a Forbes 1 million list also? You don't?
There was one. He went to jail.
Yes. So you don't see that. It's not very easy, sir, as I understand. See, I must have invested in, let's say, invested as I mean, in about 20 stocks. About 5 have gone dud. Absolutely gone dud. But the rest have given me good returns only because in 15 years I have not sold them and I have waited it long enough. I'm not saying that what I did was the right thing, but it has left me free of worries. I don't want, I am not like an analyst who will say, I want to measure each and every return from every asset I get. I want to put first my bucket into savings. I want to make sure about where I am going to be. I want my liquidity. After that, money to spare, yes, stocks. Fine. And this is the effort we are taking, and this is part of that effort. And nobody tells you, and nobody reads the right books. All you got to read is 2 books on investing, and that should be enough. You don't need to watch CNBC, read Economic Times. They are the ones which make you lose money because they are driven by brokers who need money every day. You read Benjamin Graham, but then you read the first page, you'll go to sleep. So I think investment is also not, it's not just a science or pure number work. It's also a liberal art in the sense that prices are decided by so many things which are unknown to us, not controlled by us. What a good financial analysis can do is help you make a nice short list, give you a range of what is right price, wrong price for it. It's like, for example, if you're getting an 8%, I always use this analogy. I think on the government sector or a fixed deposit, you're getting 8%. That means 100 rupees you give, you get 8 rupees. So which is your ROI or ROE, whichever way you look at it. So you look at what are the earnings and what you are willing to pay. But stocks don't have static earnings. So it becomes more challenging. How much earnings will grow? How much will it grow? And every research report you read seems to say that whatever stocks they recommend is growing at 30% permanently. That means our GDP should be at 20%. But we don't see that. So what we again do, or at least I tell people to do is, you take a company and look at 10-year record, last 10 years, it would cover at least one business cycle. Take out the worst year and the best year, take the averages. So the average is somewhere close to that. So you take that as a kind of a base performance. And then you say that based on that, the stock today is worth so much. So I am willing to pay something less than that so that I have a return. So there are complex models which can be built, or you can have your numbers put in and everything. But finally, I think it will all boil down to what our expectations, what our patience is. So if you, again, coming back to your question, I think timing, there is no guarantee of when you want to buy. I mean, when you want to sell. When you want to buy is in your control.